Welcome to the weekly market review for Monday, 7th of March to Friday, 11th of March, 2022. My name is Vishal, and I'm the head of trading education for Sharekhan Education. Today, as every week, we are going to deep dive down into the charts, look at certain levels, certain sectors, and identify a particular stock to find out important levels of demand and supply on the chart. So let's get straight to our charts and our flagship platform, Trade Tiger. All right, so let's start with the Nifty analysis, and let's start with the monthly chart. A lot has been happening now because of the war crisis, and the global markets are also looking a little bleak right now. There is a lot of uncertainty. There could be, some good things coming out, hopefully, out of this overall situation. If the war crisis ends, we have elections around the corner, etc. So a lot of news, and I think this entire move that is currently taking place in the market is completely news driven. So we hope for the best, and we hope that the markets, try to revive themselves sooner than later. But as on the charts that we see right now, more or less this monthly demand zone is approaching now. And this level is around 15,956 to 15,356. So this will be a level to watch out for in the coming few trading sessions. And it could happen probably the coming week or a few weeks. So this is a level to watch out for. On the weekly chart, prices are still hovering around this area over here. We did have a bounce from this weekly demand zone. Now we are more or less tested it deep, and in fact, today the market has shown more weakness and this level has pierced. This just indicates that now there is nothing left in this level. So we should not be trading this level anymore or any further, and we should look for more demand, more on the lower levels, right? Let's quickly go on to the daily chart. So on the daily chart, we did get a bounce last week. And in fact, it was a pretty strong bounce coming in from this level. We did have a trade plan, and we did have a quick exit on our trade as well in our XLT sessions. So we did plan in options a trade with a strategy called as bull put spread. And the reason rationally was because, if you look at this indicator, this is the IV indicator, and this tool basically plots the expectations, when the premiums are cheap or when the premiums are expensive. So this tool helps us to know whether those options premiums are cheap or those options premiums are expensive. So clearly this IV indicator was telling us that, the option premiums were very, very expensive. So when the price did come into this demand zone, that time we capitalized on these expensive premiums. We sold what is called as a bull put spread. It is a vertical credit spread. It's an option strategy. And we were able to capitalize this move. And we decided to exit the next day, because the next day the market gapped up strongly and gave us our targets. So this was one strategy that we implemented at this level. Now looking back at fresh levels on the Nifty, there is a level on the daily chart again, but that level is a little lower than the current consolidation. So if we line up that level with the monthly level, then this is the level to watch out for. It is approximately around 15,326 to 15,127. So key important markings on the chart is that in the current scenario, if everything is okay, and let's say on the weekend, the war ends, markets might reverse and move up. But if the war continues, or let's say further weeks, then we might see more selling coming across the board. Prices might just start moving down and start coming towards this level. Maybe from this level, then we would start expecting to see more of a turn in the market. So this level is going to be a key level, and something to look forward to in the coming weeks. All right, so that's Nifty. Let's move on to Bank Nifty. Let's see what's Bank Nifty up to. Let's start with the monthly chart on Bank Nifty. And let's remove all the tools. Let's start the monthly chart. So monthly chart on Bank Nifty is now beginning to look a little bit more weaker than the Nifty, as you can see, but the monthly demand zone is still holding on, and that is a good sign. So there is a possibility that the markets might see a downfall coming up to this level, which will probably drag a lot of the banking stocks towards a higher time frame demand zones. And this is an area where we expect to see a bounce because the prices have barely touched the level and moved up. So this is a sign that there could be still some more unfilled orders over here, and we could expect to see another bounce coming in. Although the level looks a little far now, the way the markets are, the volatility in the markets might, we might easily see this level sooner than later. Let's move on to the weekly chart. On the weekly chart, we did get a bounce from this area over here. Not a great level of demand, but still qualifies as per the rules. Price came in, gave a little bit of a bounce. And now we see that the prices are trying to move a little further down. Okay, now we do have this level of demand over here that we need to just keep a close watch on. And there is also this gap level of demand over here. Okay, so let's mark these two levels together. We call this level on top of level scenario. And we do expect to see some bounce coming in from these levels, right? So from the current market price, these levels are a little bit more close by than the monthly level, but let's see how this pans out. On the daily chart, we do have a couple of levels of demand that we expect to see a bounce in the coming days. We have this level over here, which qualifies as a professional gap. And this level is 33,707 to 33,226. So we'll just mark it for you. This is the level to watch out for. And if the price does come into this area over here, then we might expect to see some kind of a strong bounce coming in, just like how it was coming into the Nifty, right? And the profit targets for this one, in case if we expect to see a bounce from this area, we'll have to be a little bit aggressive on taking profits. So we do have this gap level of supply, this rally-based drop pattern. And if you want to book a few more aggressive profits, then and you want to just, this is a good level to also book some profits, right? So this is the area to watch out for, 33,707 to 33,236. And this is again on the daily chart, right? So in the next series, maybe we might bring some intraday timeframes, but now because of the war situation, it's as a trader, it's always good to lean against the higher timeframes because there is so much of volatility in the market that if you plan trades on, let's say 5 minutes, or lower time frames like 10 minutes, etc., you are likely to get whipsawed in these markets. So it's always good to rely more on higher time frames in certain market situations. And at the moment right now, because the entire market is news driven, it's good to rely on higher time frames. Okay, so the lowest time frame that we are referring to right now in this session is going to be the daily chart. Let's move on to the next market. Let's talk about USD INR. So we've been talking a lot about the USD INR, and even in our last session when we were we did mention about certain levels on the USD INR. The USD INR has been moving up very, very strongly, and that is what is also causing our markets to weaken, right? Because USD INR and the Nifty have something what we call as inverse correlation, right? So now, right now, we are very, very close to the top of or close to the all-time highs of the USD INR. As you can see over here, we are approaching the 77 handle. So it will be interesting to watch out for once the price hits this 77 handle. Will Nifty come towards that demand zone? And if the price begins to reverse from this 77 handle, does the market also begin to reverse on the Nifty, Bank Nifty, and all the other indices and start to turn to the upside? So this is a crucial level to watch out for. That is 76.99, or you can also call it 77. So it'll be important because 77 is also a round figure, and institutions love round numbers. So it'll be interesting to see if we see a potential sell-off coming in the USD INR or some kind of profit booking coming in the USD INR. Still a long way to go, but let's wait and watch. Let's move on to the weekly chart of the USD INR. So we are again coming into this supply zone on the USD INR. It's a tested supply zone. and it has been tested multiple times. Can the USD INR fall or retrace back from this level? Surely yes, right? Because the prices have barely tested this level, right? So maybe this time prices might tend to go a little bit more deeper inside the zone, or might even try to just whipsaw just above the supply and then possibly make a sharp turn to the downside. So we got to be a little careful now, because if USD INR is trading in a weekly supply zone, then the Nifty will be very, very closer to some level of demand, right? And right now Nifty is in a level of demand. So we have to just be a little careful, and we should not be aggressively looking at shorting the Nifty or the Bank Nifty indices at the moment right now. Let's move on to the daily chart. So on the daily chart, we do have this level of supply on the daily. And as you can see, today we are right inside that daily level. This daily level is more or less a reaction to a previous level. And this is that, that level of supply. So we'll be more keen to see what the prices do when the price hits 76.60. So what do we expect to see? So when the price hits 76.60, we expect to see the Nifty into a higher time frame level of demand. And when, or if both hit simultaneously, that is, if this USD INR level hits the supply zone and Nifty hits the level of demand, then it will be a perfect correlation for us to time these markets and possibly take entries in both the USD INR to the short side and in the Nifty to the long side. Let's talk a little bit about crude oil, because crude oil has just been making all-time highs every day. And right now it is in a completely uncharted territory, at least on the MCX markets. Of course, on the global markets, there are some key supply zones, but on the MCX markets, these are some of the key levels. So let's look at it with a perspective. Okay, now just to give you a little bit of a brief information. Whenever you see a move like this, right? I mean, like, we don't see these moves, coming in natural situations, right? I mean, if you look at this, like crude oil has moved up, and it is a strong market, but it has moved up in a very staggered manner. So this move to the upside is what we call as a sign of a bubble. Okay, and this is not good. Why is it not good? Because if the markets move up strongly, right, in this way, then the markets can also correct very, very strongly. So just because crude oil is moving up, it's not a good idea to just go out there and blindly buy crude oil, but it's good to wait for certain pullbacks on good levels. Okay, so right now we won't be mentioning anything about crude oil in terms of the levels, but there are these levels, and right now we have this weekly candle which is forming a level, and the level to watch out for will be this base rally. Okay, and if you can see very closely, the prices have made this base rally, prices have consolidated and then moved up strongly. So as a level of demand and as a fresh level of demand, 65.50 odd level will be a crucial level to watch out for crude oil for any longs. Okay, so refrain from shorting crude oil for the time being. Let's move on to the next market. And today we have Nifty Pharma. So we are going to look at Nifty Pharma and use the top-down approach to look at the Nifty Pharma sector. So let's start with the monthly chart of Nifty Pharma. And if you look at the monthly chart, the Nifty Pharma has made an all-time high. And on the monthly chart, we do have this drop-based rally of demand. This is the closest level of demand on the monthly chart. And this is something that we cannot ignore. So this means that the Nifty Pharma sector is coming to a higher time frame monthly demand zone. So what does that, what does that tell us? That tells us that we should look at planning more long trades than short trades on the pharma stocks, right? And we will pick up a stock for today from the list. And this is your, it will be more You have to plot this level this way, right? So this is your supply zone. So right now the pharma sector is trading in a pretty tight range, but on the higher time frame, it is more closer to a monthly level of demand, right? So this is a level to watch out for. And if the price does come to this level of demand, then we want to actually look at which pharma stocks are also coming into those levels. Okay, so which are the pharma stocks which are also coming into those levels? Let's move on to the weekly chart now, and let's do the analysis for the weekly. So on the weekly chart also, we have this level of demand, which is drop base rally. And does pharma or can pharma correct to this level before giving us a bounce? Surely yes, because currently the markets are completely news driven, and it will possibly take no time for the pharma sector to come over here. Once the pharma sector hits this area, then we should start looking at planning longs on the pharma stocks. Okay, so refrain from shorting once the price hits this level of demand, and then we expect the prices to continue its move to the upside towards the higher time frame supply. Okay, let's look at the stock for this week. So we have identified a stock, and the stock is Lupin. And let us see what is Lupin currently doing. So Lupin is currently is in a correction mode and coming into a monthly level of demand. Let's get rid of this level here for a moment. Right. So as we are expecting to see the pharma sector also coming into demand, we are also expecting Lupin to be coming into this level of demand. So the way we can time the entry of, let's say, entering Lupin towards the long side is, we want to see, or we want to wait till the pharma sector chart hits the demand zone at the same time. Okay, so if the pharma sector hits the demand zone at the same time, and if Lupin hits this demand zone at the same time, there is a very, very high probability that Lupin will give us strong bounce. So this is the level to watch out for if you want to, let's say, minimize your risk on this trade. Then the level to watch out for on Lupin will be this area over here. Okay, so just keep a close watch on this area here. This is your area on Lupin. So 588 to 537 is the area to watch out for Lupin. Price may not come there right away, but if the price comes to these levels, this will be a great buying opportunity at great prices. Remember, institutions always buy low and sell high, right? And as mentioned in the previous session, imagine Lupin was at 1200, right? From 1200, it has come to nearly 50%, right? Which is sub 600 levels. So the biggest question you need to ask yourself is, when the price comes to 600, who is selling after a fall in price? And the other mistake that a lot of novices and amateurs do is they sell in an area where demand exceeds supply. So this is an area that to watch out for on Lupin. And if the price does come into this area with the sector also coming into the level of demand, then we expect to see a rise in the Lupin stock. All right, everyone. So this was the analysis for the week. Have a lovely weekend and trade safe, and see you all next week with some fresh trading ideas. Bye-bye.
We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.